The United States and China have agreed to temporarily lower the tariffs they have placed on each other's goods in an effort to ease the ongoing trade conflict. On Monday, both nations announced they had reached a deal to reduce the severe tariffs they have been imposing, aiming to mitigate the trade war that has been impacting the world's two largest economies. In a joint announcement, the countries stated they would halt their respective tariffs for a period of 90 days and continue the negotiations that began over the weekend. According to the agreement, the U.S. will decrease the tariff on Chinese imports from 145% to 30%, while China will reduce its import duty on American goods from 125% to 10%. Treasury Secretary Scott Bessent mentioned, at a press conference in Geneva where U.S. and Chinese officials met over the weekend, "We found common ground." He added, both delegations agreed that neither side desired a separation. China announced it would suspend or cancel the countermeasures it had implemented in response to the escalating tariffs. Earlier in April, the Chinese government had imposed restrictions on the export of rare earth metals and magnets, which are essential components for various industries, including automotive, aerospace, and semiconductor manufacturers. Mr. Bessent indicated that the two countries might discuss agreements for the Chinese government to purchase American goods. Such a deal could help reduce the U.S. trade deficit with China. For now, the agreement breaks a deadlock that had significantly slowed trade between China and the United States. Many American businesses had paused orders, hoping that the two countries could reach a deal to lower tariff rates. Economists have warned that the trade dispute could slow global growth, increase inflation, and cause product shortages, potentially leading to a recession in the United States. On Monday, Mr. Bessent stated on CNBC, "We tried to identify mutual interests," he added. "We came with a list of issues we aimed to resolve, and I believe we made good progress on that." The Treasury Secretary blamed the Biden administration for not honoring its commitments to the trade deal that Mr. Trump had negotiated with China during his first term. He noted that this agreement would serve as a starting point for the current round of talks, which are expected to continue in the coming weeks toward a more comprehensive agreement. Chinese factories also saw a significant drop in export orders to the United States, adding pressure to an already sluggish economy. Chinese producers sought to expand trade to Southeast Asia and other regions to bypass the U.S. tariffs. Mr. Bessent remarked that the tariffs had effectively created an embargo, which neither side wanted. The two countries stated that ongoing negotiations would involve Mr. Bessent, Mr. Greer, and He Lifeng, China's vice premier for economic policy, who led the weekend talks for the Chinese. In a research note, Mark Williams, chief Asia economist for Capital Economics, described the agreement as another substantial retreat from the Trump administration's aggressive stance, as it does not include any commitments from China regarding its currency or trade imbalances. He also pointed out that there is no guarantee that a 90-day truce will lead to a lasting agreement, especially if the United States continues to try to rally other countries to limit trade with China. While a temporary reprieve from the extremely high tariffs is cause for celebration for businesses in both countries, the repercussions will linger. Businesses will likely face a surge of pent-up demand, leading to soaring transport prices, as companies rush to schedule shipments during the 90-day negotiating window to take advantage of the lower tariff rates. Global markets reacted positively to the announcement. The benchmark index in Hong Kong surged by 3%, similar to the rise in S&P 500 stock futures. Jiwei Zhang, the president and chief economist of Pinpoint Asset Management, an investment firm in Hong Kong, called the YO agreement a good starting point for both countries. From China's perspective, the outcome of this meeting is a success, as China took a tough stance on the U.S. threat of high tariffs and eventually managed to get the tariffs down significantly without making concessions, he said. Mr. Bessent and Jameson Greer, the United States trade representative, stated that the two countries had substantive discussions on U.S. demands that Beijing crack down on the trafficking of the chemical ingredients used to make fentanyl. Mr. Bessent said, "The Chinese understood the magnitude of the fentanyl crisis in the United States, and that there is a positive path forward." Mr. Trump initially added a 20% tariff to Chinese exports, accusing the country of not doing enough to stop the flow of fentanyl to the United States. That punitive tariff remains in place. The 10% baseline tariff on nearly every U.S. trading partner, including China, also remains in place. Mr. Greer said the negotiations were underscored by mutual understanding and mutual respect, but noted that China was the only country to retaliate against the United States after President Trump imposed so-called reciprocal tariffs on dozens of countries last month. Last month, the Trump administration announced a 90-day pause on the reciprocal tariffs that it implemented on most trading partners, with the exception of China. The White House has been racing to strike trade deals before the deadline expires in early July. The Trump administration has accused China of unfairly subsidizing key sectors of its economy and flooding the world with cheap goods. Mr. Trump has said China has been ripping off the United States for decades with unfair trade practices that have decimated America's manufacturing sector and cost the country jobs. Wang Wen, dean of the Chongyang Institute for Financial Studies at Renmin University in Beijing, said the agreement demonstrated the desire for both countries to avert the worst-case scenario. He said that China is better at dealing with the tempo and style of the second Trump presidency compared to how it dealt with the first Trump term. In laying out the agreement, Mr. Besant and Mr. Greer were careful not to antagonize China. Instead, they placed most of the blame for the trade war on the Biden administration, accusing it of neglecting the trade imbalance. Mr. Besant suggested that the two countries could help each other by balancing their economies, saying, America could restore manufacturing while China could scale back overproduction in its manufacturing sector. The two sides have sparred in public in recent weeks. The White House repeatedly said it was speaking with Chinese officials, while Beijing denied that such talks were taking place. Beijing initially took a hard line to Mr. Trump's punitive tariffs. Last month, Mao Ning, a senior Chinese Foreign Ministry spokeswoman, posted on X a video of a speech that Mao Zedong made during the Korean War, known in China as the War to Resist U.S. Aggression and Aid Korea, in which he declared, "No matter how long this war is going to last, we'll never yield." China has carefully framed its involvement in the Geneva negotiations not as a concession to Mr. Trump's tariffs, but as a necessary step to avoid further escalation. China's Ministry of Commerce said the agreement was in the interests of both countries and the common interests of the world, and that it hoped that the United States would continue to work with China to meet each other halfway. Since the Baisai tariffs were announced, China has taken many punitive measures against the United States. It suspended imports of sorghum, poultry, and bone meal from American companies and added 27 firms to the list of companies facing trade restrictions. On Monday, even as China agreed to roll back punitive measures it has imposed over the past month, multiple Chinese agencies, including the Ministry of Commerce and the Ministry of State Security, met to discuss how to strengthen export controls of strategic minerals. In a statement, the European Chamber of Commerce in China said it was encouraged by the announcement, but that uncertainty remains because the tariffs are only temporarily suspended. President Jens Eskelund, president of the European Chamber, said it hopes to see both sides continue to engage in dialogue to resolve differences and avoid taking measures that will disrupt global trade and result in collateral damage for those caught in the crossfire. Before the weekend trade discussions, Mr. Trump seemed to extend an olive branch by suggesting he would be open to lowering the tariffs to 80%. He wrote on Truth Social on Saturday that the talks were a breakthrough. A total reset negotiated in a friendly but constructive manner.